I want to just get started with this post you had on X the other day. It says, buy Bitcoin to retire a decade earlier than stock investors. And I'll read some of the quotes here. It says, study and buy Bitcoin so you could retire decades earlier with a much higher standard of living. Millennials will need at least 3 to 5 million to retire. If you're a millennial, that's up to you how long you take to get to that final number. If you invest $500 total a month for 20 years in an S&P 500 ETF, you would have roughly 260K. But if you buy Bitcoin $500 a month for 20 years, you'll end up with 1.3 mil. In 30 years, you'd end up with $8.5 million. My question is, how how certain are you in this outcome with Bitcoin?
I mean, I think that Bitcoin's a much better asset than really anything else. Even compared to something like gold, it's
Mm-hmm.
much better. I know gold is outperforming in the short term, but over the long term, I think Bitcoin will massively outperform everything. And the reason for that is that it's the only truly finite asset. Nothing else is truly finite. Even, let's say, index funds, they're not truly finite. There are companies that can be created at any time. You can create more shares of each company and you can dump them into the market. We see that with just a lot of companies are doing that. They're issuing shares. They're trying to get credit. They're trying to get funding. MicroStrategy, for example, they're just issuing shares. They're using the proceeds to buy Bitcoin. I'm not saying that it's always wrong, but my point here is that Bitcoin is the only truly finite asset, and nobody can change that supply no matter what happens. So no government can coerce you to change the supply. No government can coerce the developers to change the supply. None of that can happen. And the reason why that is because Bitcoin is incorruptible software, whereas with humans we have, let's say, feelings. We have just our own reasons for doing certain things. Let's say, if it's human nature, right? It's greed. So with the US dollar, for example, we can create more dollars at any time, at any point. You can go to a bank and you can borrow money from them, and that those dollars are basically just freshly printed out of thin air, and anybody can get more. If you tell the bank you're going to go buy a house, they'll give you more dollars if you want them.
Right.
And I think that's a really big problem, because it means that anybody who saves in dollars is having their wealth in a way stolen from them. That wealth is being moved from people who save in dollars, in those dollars, to the people who went to the bank and had those dollars newly issued for them. So I think that's a massive problem. Whereas with Bitcoin, you know for a fact that if you own one Bitcoin, you own one out of 21 million, and nobody can change that. Nobody can stop that. Nobody can censor your Bitcoin. Nobody can take your Bitcoin away from you. I mean, unless you've stored it incorrectly. Let's say you've stored it in a exchange. The exchange can potentially be corrupted. Maybe it can be confiscated from the exchange. Maybe they haven't stored the Bitcoin properly. It can be taken away from them. Whereas if you store your Bitcoin properly, nobody can take it away from you. It's impossible to take away Bitcoin unless you physically go to somebody's location and you take their private keys from them. You force them to give you their private keys. That I think that's the difference with Bitcoin. Nobody can take it away from you. Nobody can stop it. Nobody can create more. Nobody can dilute your holdings. That just changes everything. Whereas with the legacy financial system, that's never been the case. Bitcoin is basically a way to escape the legacy financial system. And I the way that I see it, I think Bitcoin is superior to every other asset, including real estate, including stocks, including index funds, including gold. Bitcoin is a better asset because it works better as money. It can be used to fulfill all of the functions of money. And I think that every single person on earth can demand it. And that's where we're going.
Those were all really good points. And for myself to add my 2 cents, I really got red pilled a couple years ago when I started to really understand the debasement of currency and this what I call the Grand Theft Auto cheat code, where the central bank continuously adds more dollars into circulation, hence devaluing my net worth. I think for myself, I don't know if you feel the same, but there's a big misunderstanding with the average individual of nominal versus real, where they get so fixated on what's on paper. If they have $5,000 in their savings account, in 10 years from now, if they don't touch it, the number still says 5,000, but that in turn is not the same as it once was today. Do you feel like that's the biggest disconnect for people to start investing first and foremost, or is there something else to add on?
I think I see. I think one of the things that people are this may be completely just a tangent from your question, but I think that one thing that people are really worried about is just risk in general.
Mhm.
So they're worried to take a risk. They're worried to lose their fiat currencies, and fiat currencies are dying anyways. So there's really either you guarantee that you're going to lose value, or you buy an asset and you take a chance of having an increase in value over time. I think that holds back a lot of people. I think that's one thing that's going to need to be overcome before Bitcoin can really help people to protect their wealth. I think we need to financial illiteracy is a massive problem. Financial illiteracy, that's what I meant. It's a massive problem because most people have no idea that their money is even being devalued. So I think that's the thing we have to overcome first before anything else happens. I do think that Bitcoin is going to take over every financial system. It's going to be the financial system's foundation, but that's going to take some time.
Understood. Yeah, I mean, I think people get so lost in thinking cash is safe, like fiat currency is safe, but I just simply view it as a slow and painful death. Like you don't notice, but every day it's just tacking on, and you're not going to better your financial situation if you just stay within that mindset. Um,
Yeah.
Going back to the Bitcoin, right? Because I really want to tap into this. You talked about the first piece of a finite asset. Scarcity is a big thing when it comes to value. And when we talk about gold, gold has a level of scarcity where we can only mine around 4% a year. But what is the difference that for you makes Bitcoin much more attractive? Is it, I guess, the ease of transactions where I could send Bitcoin in an instant? What else is there that why you think it's better than gold?
There's a podcast. I forgot who it was, but he it was on What Bitcoin Did. He basically explained how Bitcoin is a triple entry ledger system. So in
Hmm.
the past, we've had double entry accounting.
Hmm.
What that means is that there's a credit and a debit. Bitcoin is a triple entry ledger system where there's a debit and a credit, but there's also a ledger that anybody in the world can access, and anybody in the world can confirm whether the Bitcoin that they receive is real. So I think that's what really changes Bitcoin, and that's what changes the entire financial system as a whole. So I think what that does is it makes it so that we don't have to trust third parties to build our wealth, to save our wealth, to own our savings. We don't have to trust anybody. We just trust ourselves, right? We hold on to if you run a node, you know exactly how much Bitcoin you have. You can confirm whether that Bitcoin is real. You can confirm whether or not you actually have Bitcoin or you received Bitcoin. I think that's what changes everything here. That's the thing that really separates Bitcoin from everything else. There's also the self custody aspect where you can take full ownership of your Bitcoin if you choose to keep your Bitcoin with an exchange, you can. That's perfectly fine. But I think it's really important that people can take self custody. And these characteristics make Bitcoin so much better than the next best asset, even the inflation. So, for example, we know exactly how much Bitcoin will exist. Gold has, let's say, a 2% inflation rate. Nobody actually knows how much gold will exist. Nobody knows how much gold is being taken out of the ground. But gold has a certain inflation rate. And at some point, there's going to be infinite gold in proportion to the amount of Bitcoin that exists, because over time we're just going to get better at producing it. We're going to get better at taking it out of the ground. So I think understanding that, grasping that, just it seems very minor. 2% seems like a very small inflation rate with gold, but understanding that Bitcoin's 0% inflation rate is going to keep it at that 21 million. That's what separates the people who truly understand Bitcoin from the people who don't. And I think that's what's going to lead to a small group of people having way more Bitcoin than everybody else, because those people who don't understand this right now aren't stacking Bitcoin. They're still stacking legacy assets, which do have an inflation rate. So I mean, back to what you said there. It gives people self sovereignty. It gives people control over their own wealth that no other asset can. If you get if you get what I mean there.
The self custody, self sovereignty piece for myself is really important. And
Yeah.
if you look at the landscape, I guess an example from my grandfather that he grew up in Cuba, and for one day to the next he had to leave the country. In an event that were to occur in whatever country, if you have custody of your own assets, you could just take a flight, take your financial life with you, versus in what we call like the legacy system. If you have your money in, I don't know, like a Wells Fargo, there's different level of calls you have to make. different things that you have to kind of run by and get that money to a different country, I think is more of a hassle. In the second part, though, to understand this a little bit myself, to cut out the middleman, right? To cut out from, let's say I send you money directly through like what's it called in Wells Fargo, a Zelle, right? What's kind of the benefit of cutting Wells Fargo out? Is it just the cost of the transaction, or is there more to that piece?
There's the cost. They can also censor your transactions, right? Like let's say they say that they don't like what you're transacting on, they can cut out your transactions if they really want to. And there's nothing that you can do to stop that. If they deem that you're spending too much on, let's say, meat, or you're
Mm-hmm.
spending too much on gas at some point in the future, with this with our, I guess the world is moving to, like, it's more censorship. It's more just telling us what to do, and I think that's what governments want. And the money is what allows them to do that. So let's say during the lockdowns a few years ago, there were people who were forced to take a vaccine. They didn't have a choice. And the main reason for that, they didn't do it themselves. They did it because their employer said, "Oh, you can't come to work anymore."
Right.
So their livelihood was at risk. And
Right.
because that's just one part of it. But let's say the banking system, that's one thing where your employer can say that you have to leave. There are other employers who can say that, oh, you don't have to get the vaccine, you can still work with us. And that's like a different kind of, I guess that's not as serious. But with the banking system, they can literally stop you from spending. How are you going to pay for food? With work, you can find an alternative, but with banking, you can't. How are you going to pay for your groceries? How are you going to pay for gas? How are you going to pay for anything? If your bank says that you can't spend your money, there's literally nothing that you can do. They can confiscate your money, they can take it away from you. There's a centralized authority that can create more money, and you have no clue how much money exists. I think those are all problems. With Bitcoin, you have this one record of transactions. If you go to mempool.space, you can see every single transaction that's ever happened, which to me is fascinating. It blows my mind that there's this record of all the transactions that have ever happened,
Yeah.
and anybody in the world can access it. That's so cool to me,
Right.
because it's all transparent.
Right.
Whereas with the legacy system, it's not transparent at all. The legacy system is designed to have an information asymmetry between you and the bank. And then on top of that, the bank can stop you from transacting. They can censor your money. They can take your money away. They can one another thing. This is, I guess, another tangent, but the one thing that really annoys me about the legacy system is that you borrow money from a bank, let's say with a line of credit.
Mm.
They tell you that it's a certain interest rate. At any time, they can change that interest rate. How do you know that they can't do that with your bank balance? How do you know that at some point, let's say if you have too much money in your bank account, how do you know that they're not going to say, we're going to charge you interest for keeping your money in this bank account because we need you to stimulate the economy? And if you don't spend it, we're going to charge you 10% every single year for holding it with us. How do you know that's not going to happen? They can change their policies at any time because they technically own your money. It's not like you own that money. That money isn't yours. It's theirs. You're lending it to them and they can do whatever they want with it. So if that's the case, you have no power. You can't spend money on anything. You're going to struggle, you're going to starve to death, you're not going to be able to pay for shelter. That's a problem. I think that's a huge problem, whereas with Bitcoin that's not the case.
These are genuinely real things, like real issues. And I explain this to some of my friends, and sometimes I feel like they just listen, but they don't really understand the bigger picture. When you mentioned about the lockdown, I think they printed 20% of the total U.S. dollar supply in like that kind of time frame.
I think
That
it's
is
40%, which is wild.
40. Yeah, that's
40%, yeah.
insane. Like, I don't know. I think most people, they see it, but they don't take action with that. All right, so another important piece too, and the reason why I also got further red pilled into Bitcoin is I looked at my life and I was like, okay, if I can invest in an index fund and make 8 or 10%, this is how much I'll have. But one thing that I've started to consider maybe 2 3 years ago was nominal versus real returns, where it's like, if I'm making 10%, but the cost of living, and I'm gonna make an exaggerate, maybe it's going up 20% a year, it's going up, I'm still worse off financially.
Yeah.
Can you tap into that a little bit? Because I know you're very much knowledgeable in this piece. Like, what's your take on that as well?
Yeah, so I agree with you. I have a compound interest calculator here that I wanted to share. Is it okay if I just share
Of
my
course,
screen?
absolutely.
Awesome. So I have this compound interest calculator here where it goes into all of the numbers. So let's say, for example, if you have 4,000, let's say you're putting $500 into Bitcoin every single month,
Mhm.
and Bitcoin's giving you a 25% return. Over time, now, of course, that Bitcoin is going to grow, but let's say your expenses are $4,000 a month right now.
Mhm.
If your expenses grow at 7%, but the asset that you own is growing at less than 7%, you're actually losing money. So I'll give you the example with Bitcoin. So if you're putting $500 per month into Bitcoin, you can see here, we'll start with zero Bitcoin. So you start with zero Bitcoin. In the first year, you accumulate $7,000 worth. You accumulate 6.7 million Satoshis. Second year, you get to $16,000 of Bitcoin. You accumulate another 5.7 million Satoshis. Your $500 per month is going to buy fewer and fewer Bitcoin over time because the price of Bitcoin is going up. But you can also see here, if you scroll down just a little bit, your annual expenses are going up. And
Mhm.
this is something that I think people are still expecting, that their annual expenses are going to go down for whatever reason. They genuinely think that things are going to get cheaper, and they're just waiting for things to start getting cheaper. And that's not going to happen.
Mhm.
The world is designed to make inflation a normal thing.
Okay.
Everything that we do is everything that banks do, not even we, but everything that banks do is designed to avoid prices going down, because if prices start going down, then nobody wants to borrow money from the bank. The bank doesn't make any money anymore. There's no incentive for people to borrow and buy things right now. And the claim is that this is going to slow down GDP growth. But the point here is, if your expenses are $4,000 per month today, at some point they'll be $5,000 per month. So you can see here, 2030, if they grow at 7% per year, do you think 7% is a reasonable inflation rate?
Yeah, for sure.
Yeah. So
Probably.
7% per year, you go from 4,000 to 5,000 in 4 years. Then you go
Mhm.
from 5,000 to 6,000 in another 2 years. Then you can see here, it goes to 10,000. So you went from $4,000 a month in 2026 to $10,000 a month in 2040. And this is just because of a 7% inflation rate. Your annual expenses go from 48,000 to 100,000, over 100,000 by 2037. And this is going to keep going up, right? So you can see here, 100,000 to 200,000 takes another 12 years or 11 years. And then 200,000 to 300,000 takes another 8 years. So from 20 or 6 years, 2048 to 2054, you're at 300,000. By 2058, you're at 400,000. And this is going to keep growing. So
Right.
let's say, for example, if you're saving in cash and your return is basically zero, I'll put that in here. If you're saving in cash and your return is 0.1%, that's what a lot of banks will pay you, 0.1%. You're putting $500 away every single month. Your cash value is going to increase. Of course, the amount of cash that you have is going to go up. But over time, you're going to see that the cash that you save is not worth as much. It's not giving you what you need. I need to change the formula in here, but
Yeah.
if you save in cash, you're going to have a higher and higher fiat balance. But the issue is that your expenses are going to grow much, much faster. So your fiat balance won't cover your Bitcoin. Over time, your Bitcoin is going to keep, sorry, your fiat savings are not going to cover your expenses. Over time, you can see here, your savings are just going to keep they're going to keep increasing in nominal terms, but your expenses are going to grow much faster. So if your expenses are growing at 7% per year, uh, I need to make some changes on this spreadsheet. But if your expenses are growing at 7% per year, you can see here. Oh, here it is. Okay, so $500 per month. After a year, you'll have 6,000. After 2 years, you'll have 12,000. After 3 years, you'll have 18,000. After 4 years, you'll have 24,000. But your expenses are going to grow much faster because they're compounding at 7% per year. So
Right.
you can see here, if your expenses today cover 0% of your annual living expenses, let's say your savings today cover 0% of your annual living expenses. Over time, that's just going to get worse. So you go from 0%, because you're stacking in the beginning, you're saving in cash.
Mhm.
You can go to 68% of a year's of expenses by 2042 because your savings are growing. But eventually, inflation is going to start hitting you harder and harder because the cash that you have set aside. So you can see here, in 2042, you have $96,000 set aside. But if
Mhm.
inflation is 7%, that means that technically you're losing $7,000 of purchasing power in a year.
Right.
So it's not even, you're putting your money away. You're putting $6,000 away per year, but as your fiat balance grows, the amount of inflation that you're hit by is bigger and bigger each year. So once you reach to $200,000 of savings, you're losing $14,000 a year to inflation. Once you reach $300,000 in savings, you are losing $21,000 a year just to inflation. And this accelerates over time. Think about it. How hard is it to save $500 per month? If you just save it in cash, you're getting screwed over because the cash that you have is decreasing in value because of inflation, because the amount of money in the system is constantly increasing. The amount of money that exists is going to keep rising literally forever. And your portion of that total amount of money is going to keep decreasing as a percentage.
There's some questions I think people are going to have, and I think the first one is the, I guess, dollar cost averaging versus putting lump sums. In your case, do you show this graph or dollar cost averaging for the standpoint of the average individual to maybe kind of say, look, you don't have to invest a huge amount in one given time period if you're kind of scared of drawdowns in the market? You could just be consistently doing this thing, and statistically, it's going to give these results. Like, do you prefer lump sum versus DCA?
So the way that I see it, if I have extra cash, I just buy Bitcoin whenever I can. If
Right.
I let's say for example, if I get a deposit and I only let's say I get a deposit for $5,000 and I
Mhm.
only need $2,000 out of it, or like $4,000 out of it, I'm not gonna set up some DCA to buy the rest of the Bitcoin, the rest of the cash that I have. I'm not gonna use a DCA program to buy, let's say, $100 a week. I'm just going to go and take the $1,000 and buy Bitcoin with it. I'm not going to look at the price. I'm not going to look at how much Bitcoin's price I think will go up or go down. I don't really care about that. All that matters to me is that there are only ever going to be 2.1 quadrillion satoshis, and I want my share of that 2.1 quadrillion. The more I can get, the more wealthy I guess that I can become, and my children, my grandchildren, my great grandchildren can benefit from that wealth that I create. I don't really care about the price. The price doesn't matter to me. When I was new to Bitcoin, it mattered to me. I was thinking about, oh, I want to buy it at 15,000, I want to buy it at 10,000, I want to buy it at 5,000. But now I don't care. If the price is 126K, I'll buy if I have
Mhm.
extra cash. If the price is 80K, I'll buy if I have extra cash. If the price goes down to 60K, I will buy more. That's all that really matters. I don't really care. I don't care about the price. The fiat
Right.
price to me is just a distraction.
I agree. I mean, the price throws people off a lot of times because they look at it and they're like, "Oh, it's so volatile; it could come crashing down any moment." But it's like you have your wealth in a thing that's guaranteed to crash throughout your life, like 100% certainty. So there's a huge disconnect there. And then the second piece too, right? So this is another thing that I get pushback a lot of times when I show people about, like, oh, this is potentially how much it could be worth. They're like, oh, but I don't want to wait 30 years to realize this gain. I'm going to be 60, 70 years old. You have this video where you talk about LTV and being able to borrow and use your Bitcoin as collateral. Can you break that down for people to understand that?
So using Bitcoin as collateral?
Yes. Yeah.
Yeah, absolutely. So what you're doing with Bitcoin is you're using your Bitcoin to borrow. So what you're doing is you're basically bringing your consumption with that Bitcoin. You're using the value that you created with that Bitcoin, the value that you accumulated. You're using it to consume in your lifestyle. So what you can do is you can let's say you have one Bitcoin.
Mhm.
That Bitcoin isn't really. I mean, it's not. People like to say that it's not doing anything. They like to say that, oh, it's just sitting there. Instead of selling it, what you're doing is basically you're using a lender to take cash out of it. You're taking liquidity out of it. I guess that's the way to say it. What you're doing is you're following a strategy that the wealthy have used for a very, very long time. What they do is they never sell their assets. They hold on to their assets as long as they possibly can, and they borrow against them. They keep their assets for as long as they can, so they have the compounding working for them. And that's what I think that's what fiat currencies are designed for, right? So fiat currencies are designed in a way where you can create as much of them as you want to. There's no limit to how much fiat can exist, and because of that, people can buy assets and then they can borrow against them. They can use the appreciation on those assets to pay for their expenses. So there's a strategy called buy, borrow, die, where you buy assets, you wait for them to appreciate, and then you go to a bank or you go to some kind of lender who will give you cash if you use that Bitcoin as collateral. So what I mean by that is, or whatever asset is, it can be houses, it can be stocks, you can use a margin loan, for example, you can use a mortgage. But the point there is that you hold on to the asset and you you don't disrupt the compounding process, but at the same time you're using some of the value that you have in that asset, you're extracting some of it, and you're in a way you're playing a fiat game, right? What you're doing is you're expecting that fiat currencies will decrease in value and your asset will increase in value. So over time, you're potentially not going to have to pay back that loan because the loan's decreasing in real terms, like we just mentioned, real terms versus nominal terms. You still have the loan in whatever nominal terms it is. So let's say you borrow $1,000, over time that loan value is going to increase, but in real terms, in proportion to Bitcoin, it's going to decrease. What you're going to see is that over time, uh, in the beginning, let's say you take a 50% LTV loan. LTV is loan to value. So the loan divided by the value of your collateral is 50%. So if you take $1,000 loan, you use $2,000 of Bitcoin as collateral, that's going to be your LTV, 50%. Over time, the loan is going to increase, but in proportion to Bitcoin, let's say Bitcoin can grow at 30% per year, but your loan is going to grow at 10% per year.
Mm-hmm.
In proportion to Bitcoin, the loan is going to decrease in real terms. So over time, less and less of your Bitcoin is used to pay back the loan. And if you want to, you can use your future cash flows to pay back the loan. The thing that the wealthy do here is they never sell their assets. They use their assets as collateral. They buy assets and then they keep those assets for as long as possible. And like I said, this is what fiat's designed for, right? So what they do is they buy houses, they borrow against them, they pay for their lifestyle, or they buy other cash flowing assets and they use the cash flow from those assets to pay for their lifestyle. I think it's kind of a broken system, as in the people who don't quite understand it are always getting screwed over. But I think this is the cost of having a financial system that's based on fake money. And you can use that fake money to your advantage if you own Bitcoin. If you understand what Bitcoin is, if you understand how the financial system works, you can use it to your advantage by never having to sell your Bitcoin. You can keep the compounding working for you while you get to consume at the same time.
That was powerful. That so your end game is not actually selling the Bitcoin in 30 years. It's more so Bitcoin will continue to gain in price and value, market cap. And then you could borrow against that and use that as cash as kind of a cash flow, correct?
Yeah,
To understand LTV a little bit, because I honestly I'm a little confused on it, right? So let's say the loan I want to get $50,000. I want to borrow 50,000, and let's assume Bitcoin's trading at 100,000.
yeah.
If I use one Bitcoin as collateral and I borrow 50,000, my LTV would be 50%, right?
That's correct. So actually let me share my I'll share that compound interest calculator again because
Yep.
I think this really shows you
Yeah.
what I mean. So let's say for example, one Bitcoin. We'll use your example. One Bitcoin is at 100K. I'll
Mm-hmm.
change this to 100K, $100,000. You use one Bitcoin as collateral. You take on a loan for $50,000.
Yep.
You have 50% LTV. So the LTV is basically just the loan divided by the Bitcoin collateral.
Right.
And over time, what's going to happen is, let's say 10 years from now, I'll give you this example here. So let's say 10 years from now, your Bitcoin grows at 25% per year.
Mm-hmm.
So your Bitcoin goes from 100,000 to 931,000 in the next 10 years. So by 2036, I think that's pretty reasonable. So it goes from 100,000 to 931,000. Your Bitcoin collateral went from 100,000 to 931,000, but the
Mm-hmm.
loan, if your interest rate is 11.9%, your loan went in that 10 years from 50,000 to 153,000. So this number might scare people. The growth in the loan and this interest accumulated of $103,911. But what you have to look at is the LTV. So your LTV is, like I said before, the amount of your Bitcoin that you're going to have to use to pay back the loan. So in the beginning, you'd have to sell 50% of your Bitcoin to pay back the loan, right? Because you have a one Bitcoin worth $100,000, the loan is $50,000. You have to sell half of your Bitcoin to pay back the loan. I think that's pretty much self-explanatory. But over time, as Bitcoin grows faster and your loan grows slower, you're going to have to use less and less of your Bitcoin to pay back that loan. So your LTV went from 50% to 16.53%. So in this case, so back here in year zero, you'd have had to use 0.5 Bitcoin to pay back your loan. In year 10, you'd have to use 0.1653 Bitcoin to pay back your loan. So you've already gotten the consumption, you've already taken the money out of your Bitcoin, but in the future you can pay it back. You can pay back that loan with a very small amount of Bitcoin that maybe is worth significantly more. But also something else that you could do. This is something that the real estate people do really, really well. With real estate, you have here you go. So with real estate, what happens is over time you borrow money against your real estate in the first place. Let's say your
Mhm.
house that you borrow against is worth 500K.
Mhm.
You borrow 400,000. You have an 80% LTV. Over time, we know that house prices will continue to go up, and they'll go up forever. And the reason for that is that the dollars that are chasing houses are infinite,
Mhm.
whereas the number of houses are finite. It takes
Right.
time, effort, energy to produce more houses, right? So over time, the price of that house goes up. So let's say the price of the house goes from 500,000 to 2.5 million. What you can do, this is the thing that really got me to start thinking more about this. What you can do is you can use the same house to borrow more money. So
Mhm.
the growth on the house from this year to this year is $2 million. So it went from 500,000 to 2.5 million. The growth is 2 million. You already borrowed $400,000 against the house, but now the lender will probably want you to borrow more. They'll give you an incentive because it's a way for them to make money. So what they'll do is they'll allow you to bring your LTV back up to 80%. So if you just kept that $400,000 loan, you can see here 400,000 means that your LTV is now 16%.
Mhm.
But what they'll want you to do is they'll want you to borrow more. So you can technically borrow another $1.6 million against the exact same house, which to me is wild. It's crazy because you have the same asset, the exact same
Right.
asset, but now you can borrow more dollars against it. And the same thing applies to Bitcoin, right? So with Bitcoin, if I go back to the Bitcoin LTV, let's see here, where is it? Here it is. Okay. So with Bitcoin, the value of the collateral went from 100,000 to 931,000. But what the lender will be willing to let you do is, because you only have a loan for 153,000 and your LTV is at 16.53%, the lender will probably want you to go back to a 50% LTV because that way they make more money. You don't have to do that necessarily, but if you wanted to, technically you could take on another loan for $311,000 against the exact same Bitcoin. So you started with 50K, and then you took on another loan for 311,000 because your Bitcoin has appreciated and your collateral value has increased, has appreciated. So what you're doing here is you're bringing your LTV from 50% to 16.53% just naturally with Bitcoin's appreciation, and then you can bring it back up to 50% by borrowing against your Bitcoin again, which, I mean, to me, it's wild that this is even possible. I'm surprised
Right.
that fiat even exists anymore. I'm surprised that people even want fiat, but I mean, it makes sense because people don't understand that fiat currencies are designed to just lose value over time. But I have to say, if you only have one Bitcoin, don't borrow against that entire Bitcoin. Borrow
Right.
against a very small amount of your portion, a very small portion of your stack, because if you get liquidated, you could lose all of your Bitcoin, and that's a massive problem. If you only have one Bitcoin, you could have your Bitcoin taken from you. It'll have to be sold if Bitcoin's price falls significantly, and I won't go into that, but
Mhm.
in general, Bitcoin's price will have to fall if your LTV is 50% and the liquidation percentage is 80%. So they'll start selling some of your Bitcoin when your LTV goes to 80%. Basically, Bitcoin's price has to drop 37.5% for you to start getting liquidated.
And what's the minimum margin requirement for these loans with Bitcoin as collateral? Is there like a standard right now?
So right now, if you just take the loan with the lenders that I've seen, if you just take the loan and you give them collateral and then they give you your fiat, it's in general 50%, but you can change that however you want to. So let's say you start with one Bitcoin, you have $100,000 of collateral, you have a $50,000 loan. Let's say you want to decrease your LTV. What you can do is you can add another Bitcoin. So let's say you go to two Bitcoin. The price of Bitcoin would have to drop 68.75% for you to start getting liquidated. I think that's the thing that's key here. If your LTV is 50%, it has to drop only 37.5%. But if your LTV is down to 25%, it has to drop way more, almost 70%, for you to start getting your Bitcoin sold, because that's where your LTV would go to 80%.
With that being said, is there any, because honestly, margin has been something that's always scared me. Like I've never used margin for index funds or things of that sort, and I've seen it in my own life professionally. Is that
Yeah.
something that for most will be, I guess, like very hard because I've seen Bitcoin have several large drawdowns. I'm kind of scared like people are going to get margin called on it. So your approach is don't kind of utilize the maximum leverage of like 50% requirement. Um, Probably do the less the better, because the higher the drawdown, you have more wiggle room there. Something for myself I'm tentative on with when it comes to equities, and specifically with crypto. I know there's a lot of times where Bitcoin has large drawdowns. From your
Yeah.
standpoint, how much margin would you rationally use, knowing that? Like, are you using
I would
50%
personally say
requirement?
maybe
Yeah.
use. So what I would say is don't use your entire stack as collateral. First of all, right? I would say
Mm-hmm.
avoid doing that, because if you do that, then you could have there even just the volatility is there, but there's also other factors, right? So let's say your lender goes bankrupt and they
Mm-hmm.
can't give you back your Bitcoin. You're screwed, right? Your Bitcoin is gone. Let's say the U.S. government says we're going to confiscate your Bitcoin. We need it for our own strategic purposes. Every Bitcoin that you have in that lender's hands could potentially be taken from you. So those are things to consider. So what I would say is, at most, I mean, just from being just from being a paranoid Bitcoiner, I would say at most maybe use 20% of your stack as collateral at maximum, and that's extremely risky. 20% of your stack can be gone just like that. But then if you want to be a little bit more secure, you want to make sure that you don't have your Bitcoin stack taken from you. What I would do is maximum 20% at the bottom of a bear market. Let's say Bitcoin's price falls 50%. Maybe at
Mm-hmm.
that point use 20%. But if it's at the top of a bull market, let's say the price is at its all-time high, I don't think borrowing against 20% of your stack would be the smartest, because there's a lot more to fall. If Bitcoin's price is already down 50%, how much more can it fall? Maybe it can fall another 50, 60, 70%. But from the top, where let's say Bitcoin's at 150,000 and then there's a massive bear market, it could potentially crash 70, 80, 90%. So that means that you'd have to keep adding more and more collateral to your Bitcoin backed loan in order to make sure that you're not liquidated. And I think that for a lot of people, that's not sustainable.
Noted. And given it's not right, like the legacy system, it's been around for a while, and for myself, I feel like Bitcoin, it's the kind of the landscape. There, it's very much wild, wild west. If you get caught up in something that someone's trying to scam you in terms of loans or whatever, is there one that's like popular right now that's kind of like the standard where it's well known that you could use your Bitcoin as collateral?
Like a lender, is that what you're saying?
Yeah, like a lender, yeah. Or would it just be at a traditional bank?
I think that so I think traditional banks are probably going to take a little while to get to this point where
Right.
you can borrow against your Bitcoin through them. There
Mhm.
are I think there are banks that are starting to do this, um, and I don't know when they're going to really start doing this a lot more, but they're already starting to do this, which is great. But I think over time there's a I think over time there's going to be a lot more Bitcoin specific companies that do this, and I think they're going to take a massive portion of that business. The only thing that traditional banks one thing about Bitcoiners is that they don't trust traditional banks. So
Right.
I personally I don't know if I'd want to go through a traditional bank to get a loan, even if the interest rate is lower. I don't know if it makes sense, because I mean they've always tried to screw us over, so why wouldn't they try to screw us over here too?
Right.
So the way that I see it, I think traditional banks will start going into this, and I think a lot of people will use traditional banks to get Bitcoin backed loans. But I would personally want to stick to the Bitcoin companies. Like this isn't sponsored or anything like that, but I personally like Ledin. I think Ledin's doing
Mhm.
great. I have a loan with them, and easy to pay attention to track to make sure that I don't get liquidated.
Noted. And I know your conviction's really high with Bitcoin. I've seen the CFA Institute send John Wick to get you multiple occasions. What's the reasoning for them kind of going at you sometimes with the whole thing on Bitcoin? Is it they're just like, oh, this guy's cooked, doesn't know what he's talking about? Like, what's up with that?
I think it's partly that they don't quite understand Bitcoin. I think
Hmm.
some of my claims may seem too crazy to them. Like there was a post where I said Bitcoin's going to a million, it's going to 10 million, it's going to 100 million. And I don't think they quite saw that happening. It's kind of difficult to grasp the concept that Bitcoin is going to go up unless you really understand it. Like some of the things that we talked about in this video, the mempool, for example, most people have no idea what that is. Most people have no idea
Mm.
how that even affects Bitcoin at all. Like they don't know that there is a record of transactions that anybody in the world can access. And because of this, I don't think most people quite understand what Bitcoin is. So saying that Bitcoin is going to go to 1 million just sounds crazy to them. But I do
Right.
genuinely think that's going to happen. One thing that they came back at me with was they asked me if they asked me how I came up, what the basis of my conclusion was, why I think that Bitcoin is going to go to these prices. And I asked them if they ask the traditional investors if what their basis of their conclusion is. So let's say, for example, if somebody's talking about stocks and they say you should buy index funds, I constantly see CFAs talking about index funds,
Yeah.
and I don't ever see them getting investigated and asked what the basis of their conclusion is. So why am I being asked? I
Mm.
think it's because they don't quite understand it. They haven't put in the time to understand what Bitcoin is, and I think that's a massive problem that's going to resolve itself over time. There's going to be a lot more Bitcoiners who are CFA charter holders, or there's going to be CFA charter holders who study Bitcoin and they want to own it, and eventually the CFA Institute is going to be forced to teach about Bitcoin. And I think that my content is going to age pretty well. And if my CFA is taken away from me, then I mean, I would say that that's their loss.
For sure. And is there any, I guess, question? Because again, like me studying finance, and I obviously you know about this more than I do, but the concept of like black swan events or diversification is just out the window. It's just all in on Bitcoin. That's your take, right?
I wouldn't even say all in on Bitcoin.
Mm-hmm.
I have a video where I explained Bitcoin and cash
Mm-hmm.
is the key. And what I mean by that is that I think there is a value to having an emergency fund in US dollars. The reason
Mm-hmm.
why I say that is because if let's say Bitcoin crashes 90%,
Mm-hmm.
your expenses are still denominated in US dollars. Let's say Bitcoin's price crashes 90%, and then at the same time you lose your job, you're going to have to sell a significant portion of your Bitcoin to pay for your expenses.
Right.
That's the worst case scenario. The best case scenario is, let's say, for example, you do have cash, Bitcoin's price falls 90%. You could potentially buy 10 times more Bitcoin with that cash because Bitcoin's price has fallen. So that's to your advantage. There's I think it's really important to have cash because it gives you that stability, it gives you that peace of mind where you can take more risks if you own cash. Let's say if you have cash on the side, you could probably use that cash as basically a buffer to take a bigger risk with, let's say, starting a business or
Mm-hmm.
creating some kind of product, quitting your business, quitting your job, and creating some kind of product or service that you can service a lot of people with and make a lot more money. But without that cash buffer, that may not be an opportunity that you can take advantage of.
Cash is king, as they say. Yeah, I mean, for myself, I agree. Having some dry powder on the side, if there's some drawdowns, you could invest more, and also just emergency expenses make sense financially. One point, or like two more points, I want to make, and why Bitcoin over, let's say, Ethereum, or one I've been hearing a lot about, which I don't have any money in, is XRP. Why is Bitcoin the golden child?
One reason that I don't like XRP is that it doesn't have a full ledger. So we mentioned mempool before, how
Mm-hmm.
on mempool you can see every single transaction that's ever happened. You can see the movement between wallet to wallet, address to address. Whereas with XRP, from what I've seen, the first week of transactions are missing, and we have no idea where those transactions went. We have no idea if those transactions happened, who owns that XRP. We have no idea. That's one thing. So it's almost like the example that I like to give is, let's say you were paying for a mortgage for the past 20 years and your bank loses the payment history that you have for their mortgage and you don't have a record of it. Are you just going to trust them on your bank balance or on the mortgage balance? Are you just going to trust them? That's the way that I look at XRP. If we don't have the beginning if we don't have the first I think it was like 36,000 blocks or something like that, if we don't have the first 36,000 blocks, then how do we know what happened in that time period? We have no idea. Why would you trust a system like that? If XRP is decentralized, then why is it that those transactions are missing? It doesn't really make any sense to me. Another issue with XRP is that a very small group of people, a very small group of insiders own they own the majority of XRP. So in the beginning, 80% of XRP was given to Ripple Labs, and then 20% was given to the executives, I guess, at Ripple Labs. And what that means is that those people own all of the XRP, and what they do is they sell XRP into the market to make money. That's the only stream of income that they have. They don't produce anything of value. And I think that's a problem, because what they're doing is they're just, in a way, they're running a pyramid scheme. It's a scam in every single way. The money has been created out of thin air. Nobody worked for it. All they're doing is they're hyping you up to believe that this currency is going to go up when nobody has any idea whether it will go up. And they're selling you the currency. They hold it. They never buy more of it. Whereas with Bitcoin, anybody who studies it, anybody who understands it, is constantly trying to get more of it. So I think there's a huge gap between XRP and Bitcoin. I would consider saying that other altcoins are probably better than XRP, even though they're still trash. XRP is just at the bottom of that barrel.
And then in terms of the traditional side, just to recap on these last two, why Bitcoin over real estate?
Why Bitcoin over real estate? Okay, so real estate has a lot of the way that actually the most basic thing here is that if you own real estate, then you basically just purchase the part-time job, because you have to manage the property, you have to pay for maintenance and repairs. There's much more risk to owning real estate than there is to owning Bitcoin, because with real estate, the property has to be maintained and repaired. You have to have tenants in it at all times to pay for your expenses. You have to pay for a mortgage. You borrowed money to buy that property, used leverage, and that's a problem
Right.
on its own, because if the property value decreases, let's say, for example, you own this property and a garbage treatment facility opens up right next to it. What are you going to do about it? The value of the property is going to drop immediately. Even though the location in the beginning was great, the future prospects of that location are terrible. And what I mean by that is people may not want to live in that property in the future. Maybe they want to live in it today, but maybe they don't want to live in it in the future. There's also all this government red tape. You have to pay property taxes. You have to deal with a realtor. You have to deal with a bank. You have to borrow the money for it. Extreme amount of leverage. There's also a lot of liability where, let's say, the person you rent that property to, they could just completely destroy it. And to me, that's a problem. Why would you do that? The way that I see it, there are income products with Bitcoin. So there are, let's say, for example, I'm not telling you to buy this, not telling your audience to buy this.
Right.
For example, there's BTCI. It's an income fund for Bitcoin. There's STRC, which MicroStrategy came out with. It gives you a variable interest rate. Right now, it's 11%. I think that those are probably better than owning real estate, because number one, there's a lot less work, and number two, you don't have to manage. You don't. Sorry, not manage. I was going to say you don't have to manage the property, but you don't have that. That's the work. But you don't have to deal with a bank. You don't have to go through a bank to borrow money to buy STRC or BTCI. You can hold on to them in your brokerage account. Of course, you have to use a brokerage, but you don't have to go through and borrow money. You don't have to go through with a mortgage application. You don't have to find tenants. You don't have to find a realtor to work with. The realtor is not going to take a 5-6% cut on your property. I think Bitcoin is way superior to real estate. And there's also the other aspect that with real estate, if you need to leave the country, there's nothing you can do. Your real estate stays there. You can't move real estate. Whereas with Bitcoin, you can memorize your seed phrase and you can go wherever you want to.
Dude, that was very powerful, man. I really genuinely learned a lot today. With that take of wealthy never sell assets, that just triggered something in my mind, like a light bulb moment. Where can people find you on social media? Feel free to plug all your stuff. And
Yeah, I have an X account, just my name, Rajat Soni. I have a YouTube account. You can search for my name on YouTube as well. I only post about Bitcoin and personal finance. I also have a newsletter. I have a community. All those links are in the description of all my videos. You can go ahead and check those out. I think Bitcoin is going to completely change the world. I've put all my time and effort and energy into this thing, and I think it's going to pay off. I think it's worth it, because it's just helping a lot more people to get to that point where they become orange pilled and they actually want to own Bitcoin and they completely change their lives. I've gotten so many emails, so many messages, so many comments from people that say that I bought Bitcoin because of you. And it's so much more fulfilling than just working in the banking system.
well, thank you so much for your time, man, and have a great day. Thank you, man.